Well, today I had a huge loss, and this loss was painful. After day trading now for about 8 weeks, I had a really nice winning streak, and today that finally came to an end. And boy, that hurt. Mainly because the loss didn't have to be so bad. I broke some rules that I shouldn't have broken, and I had to pay for it. So I'm just gonna show you right quick because this thing, ooh, is bad. I've always said, and you hear people talk about, there's a risk to this thing. I've never been oblivious to that. Never downplayed that risk, but there are a lot of things you can do to minimize losses and risk. Loss is inevitable in this business. You're going to lose some, but there are things you can do. As Robert teaches, you got to lose. There's a way to lose, and you have to lose the right way. And if you don't lose the right way, it can cost you a bigger loss. And today, I had a bigger loss than I needed to, and I'm going to explain all of that. But in my last video, I showed y'all that I had cracked the $10,000 mark. And as you can see, it's down to $7,193.99. This trade happened today. As you can see here, the change in today, I lost $2,619.43, a 26.69% loss. So all my numbers are significantly down. You know what I mean? So this one was hard. It didn't even have to be this high. One of the rules, and what you got to understand is, look, with this type of trading and earning income, you really have to come to grips with the fact that you are in the risk management business. And your goal is not to chase dollars, it's to minimize risk. You know what I mean? And I will say that I was looking at the dollar today, and, and one of the other things you have to factor in. So, for example, if you get stopped out of a trade or get out of a trade and you took a hit, one of the primary rules is not to hop back in, but to shut your computer off, get off the computer for the day, clear your head, identify what happened, what went wrong. One of the things you want to do is always be journaling your trades. And so what I do is I have a tablet, I write all this stuff up, and I haven't done it for today yet. I'm gonna do that. I wanted to sit down and reflect. So we write down all these notes about the day, and I jumped back in. When I lost the first time, I jumped back in. It was a very noisy day today, very noisy. A lot of stuff going on. Trump got on the TV and started running his jaws, so that didn't help. And you know what I'm saying? And so, and we, again, look at all these notes. I write notes every day. I jumped back in. So the first hit I took was like $1,200–1,300. That would have been it. It wouldn't have been as big of a loss. I should have stopped then. But I jumped back in because I believed it was a good trade. You know what I'm saying? In my brain, I'm rationalizing that it was a good trade, and I shouldn't have got stopped out. And because I got stopped out right at about the time Trump started talking. And so I'm going back in. I'm gonna recoup some of this money I lost. In my mind, I'm thinking, okay, I lost $1,200–1,300. If I can recoup about $400–500 of that, I'm good. And so I really believed it was a good trade. So I went a little further out, and it wasn't a good trade. So I got hit twice, and then I did something stupid. I took the stop off that I had set, because again, I could have been. We're in the risk management business. You got to remember that. I took the stop off, And I said, I'll control it myself and get out when I get to a certain point. So I could have got out with less damage on the second round, but I said, now I'm going to push it up, I'm going to push it up, I'm going to push it up. And then at the last minute, I finally clicked it and it hit my pocketbook. So I could have minimized the second loss. One, the second loss didn't need to happen because I shouldn't have got back in. Two, when I had the second loss, it could have been less, but I took the stop off and manually did it myself. Many people, when they do it themselves, they generally wait too long and they won't get out and they wipe out their account, all in efforts of hoping that things turn around and get better and get better. And at the end of the day, when I went back and looked at the chart, that thing was not getting better. It was not even close to getting better. So you got these rules that you must follow. And sometimes you got to take a hit before a lot of these rules are ingrained in your brain that you must follow these. The thing, I've never been arrogant about my wins. I never thought I was smarter than the next guy. I never believed I was a better trader. I never believed that I had it going on. I've always spoke about the fact that, I know there are losses that come with this, and one day my day will come. And so it came. And it's easy for me to sit and say, oh, if I get stopped out or get out of a trade and lose, I'm not jumping back in. It's easy to say that until it happens. But I jumped right smack back in. I waited and waited and waited till I thought was the perfect opportunity to jump in. And then, bam, it wasn't right. So I took that hit. So like I said, the loss didn't have to be that bad. I could have kept that lower, at least half of that for sure. You know what I mean? The goal here is to live another day to trade. Fortunately, I didn't trade with all my contracts, so which is something that I just recently changed. I said I would only trade with 5 of my contracts, and once I got up to 15 grand and had more contracts, I would be less aggressive and continue to use little. But because I only have a few, I don't have a whole lot of contracts. My goal was to kind of build my account up fast and grow slowly. So yeah. So anyhow, today what I did was I went down. Let me show you this thing, man. This thing, the market, I think it just dropped down like almost 2% from the time it opened up, and within that first hour it just dropped. And then of course, I assumed that it was going to ride the bottom of the midline, below the midline, but of course that thing came right on up. And while that thing was going up, I hopped in here at a certain point. And honestly, I shouldn't have got in today's trade. There was a lot of news going on. We was expecting the market to react a certain way because yesterday was the first day that the market was open, Monday, since missiles were launched over in Iran. So we was expecting a horrific day yesterday, and it didn't happen. And so we assumed that that horrific day might happen today. But one thing you learn is you cannot predict at all what the market will do. And the thing you have to understand and play if you're going to hop in this space is play the probability games of saying, hey, I'm going to win. If I win 75% of the time and lose 30%, or win 80% of the time and lose 20%, get your math, get your numbers, and work all the math out and play the probabilities, sticking, like I said, not chasing dollars, chasing points, really. That, you playing a probability game, and if you have a system and you stick to the system, you can outperform this thing. You can win. But when you there's a guy that I read, Mark Douglas, who teaches the psychology of trading. You know, I can't get emotional when things go up and down. I can't make decisions based on hunches because my hunches are going to be wrong 99% of the time. Um, Again, this is a probability thing, almost like the casino. The house always wins. The house doesn't get emotional if somebody wins $20,000 at the slots. They know in the end they're going to win overall. And so Robert has an excellent system. It works, it's solid, but there are just some basic guidelines you must follow. Like, for example, uh, with me, I'm just reading over some of my notes. What I did today, I came back and wrote down some rules. You know what I'm saying? Um, I'm going to stay a certain amount of points away from the highs and the lows, no matter what. If the market drops, particularly within the first hour, from the time it opens and in the first hour that I'm in, that thing drop 1% or more, I'm staying out. I'm not even going to get in and trade. You know what I mean? You know, I need to set my stop loss at a certain point. You know, there'll be certain days I will not trade on, like Fed day. And based on my research and data, I went back and back tested days after Fed day. And the day after Fed day just didn't seem like it would be a great day to be trading. So I wrote down some things on days I won't trade on. I won't trade on the day that they read the Fed minutes. When the Fed minutes are delivered, I won't trade. You know, and again, other rules. If you lose a trade, you're done for the day. You know what I'm saying? There's certain other rules I will follow. I will get out of a trade at a certain time, or when I reach a certain threshold, I'm out. I'm not going to be trying to lose money to gain the extra $10, $20, $30. Ain't happening. You know what I mean? So like I said, you know, I'm having to learn, and today's loss reinforced that. Detach from the money. I'm not trading money. I'm trading points and processes. You know what I'm saying? And so, like I said, I am a risk manager first and a trader second. My goal is to be in the game tomorrow, not get rich today. And today I was trying to get rich. And that greed monster is real. And like I say, it's going to take a few. Today's loss was a reminder to how important this stuff is. You know, a lot of people are like, oh, he had beginner's luck and blah, blah, blah. Listen, I was never disillusioned about the trades I won. And for me, I have to learn the hard way sometimes. And today was the hard way. And we recover. The beauty is I'm going to hop right back in there tomorrow. We don't run away. I'm not going to be overly cautious. That's why I'm taking the time tonight to clearly write out all the rules and guidelines I will follow, what I will get in for, what I hope to make each time I jump in. At what point would I get out? At what point will I stay? If these conditions present themselves, don't get in, don't get out, stay away from this, stay away from that. And again, minimizing risk. That's the name of the game. So while I'm sad that I lost $2,600, because that's a lot of money, I'm grateful for the lessons. You know, Bible saying all things be grateful. You know what I mean? So I am very grateful for the lesson. And today's loss really is going to make me a better risk manager, not trader. I'm in risk management. So today's lesson will help me become a better risk manager of my trading account. And so tomorrow we'll be back in. I believe I can recover. Probably I can recover my $2,600 back. And again, not taking not being overly cautious, but sticking to my rules, I anticipate I can make my $2,600 back. Let's see. I could probably make it back in about 6, 7 days. Make my 2,600 back and be back on track to, once again get back to my 10,000 and beyond. So, and this is one of the main reasons why I'm taking a pay myself first. Once I reach my $10,000 threshold, anything over 10,000 on Fridays, I will pay myself 50% of that as income and then leave the rest in. Because you hear about all these traders, I made 100,000 trading this year, but then they lost 90,000. They never paid themselves. They never took any out. So I'm gonna pay myself so that way I can say, hey man, I made some money. Our quality of life improved because of it, and I'm not gonna just leave this money in this virtual account, essentially, this digital account where I can't touch it and use it, because I almost feel like I'm a gambler. If it's money that you're not using and not using for personal use and whatnot, it's like, you don't factor in the fact that this money is real because you're not using it. It's just play money to go play on the stock market. No, I'm going to pay myself a cut, keep the other 50% in, and we're going to keep growing it, compounding it, so we can make more and more and more and more. And, but look, I'm still profitable. Started with 5,000, let's say 6,000, because I added some more money. I'm still profitable. I'm over, I have more than what I earned, started with, and definitely still better than what the bank would have given me, and better than the stock market, just as good as the stock market return, you know what I mean? So I'm good. I'm excited, but you know what? Hey, I'm going to share the good and the bad. I'm not going to pop up here showing you all the good stuff and the positive side of things, but this is a learning moment. If I were to start a business, let's say I took 10 grand, I opened up a new company. Things happen. I might get scammed by a supplier or buy some bad product, and I have to go get computers, internet, business license, bank account, corporation set up, office equipment, products to ship out to my customers. I might just get some bad product, or somebody does a chargeback. There's loss in every business, you know what I mean? And again, as the business owner, your goal is to minimize the risk and minimize getting scammed and getting bad product, and by doing your research, doing your homework, it happens. And so this is no different than anything else. And the main thing you're really going to be checking is yourself, your mindset, and all of that. So I look forward to rebuilding this. I look forward to keeping y'all up to date on my progress. This is not me. I'm not quitting. I'm going to keep it moving. And I'm looking forward to a positive day tomorrow. So you take I took all the wins. You got to take the losses that come as well, but you keep it moving. You know what I'm saying? So this is Cartel Ross. If you'd like to learn more about day trading and whatnot, check out Robert's course at www.slowlifetrading.com. If you're interested in learning more about living abroad, we're staying here in Mexico for the last 4.5 years. Check out our website, www.moveabroadandthrive.com. Thank you for watching.